Gold just smashed through $4,500 for the 50th time this year. The rally is up 70%, but after hitting 45.26 yesterday, it pulled back hard. Is this the top everyone's been waiting for, or just another dip to buy? In the next 5 minutes, I'll show you the critical levels and 3 trades professionals are setting up now. Let's dive into the most explosive gold market we've seen in 45 years. Gold is trading at $44.79. After touching a record 45.26 just yesterday, this marks the strongest annual performance since 1979, with gains topping 70%. The Federal Reserve cut rates 3 times this year, dropping the policy rate to 3.6%. Markets are pricing into more cuts in 2026, despite Fed hesitation on further easing. The US dollar index has collapsed nearly 10% this year, its worst performance in decades. Central banks bought over 1,000 tons of gold for the 3rd straight year running. This de-dollarization trend is structural, meaning the buying pressure isn't going away anytime soon. Geopolitical tensions escalated over the weekend when the US seized Venezuelan oil tankers. In international waters, the entire precious metals complex is rallying, with silver hitting $72 per ounce. When gold, silver, platinum, and copper rally together, it signals a broad debasement trade against fiat currency. Holiday trading has thinned liquidity, but January will bring full participation back for the real test. Gold is trading inside an ascending channel that has guided the entire rally to new highs. Price recently broke above the channel's upper boundary near 44.30, signaling extreme bullish momentum. Immediate support is forming at 44.50, with secondary support at the 4400 psychological level. The critical support that would break the bullish structure is the 50-day moving average at 41.67. On the upside, immediate resistance is the recent high at 45.26 that needs to break. Beyond that, technical targets are 45.50, then 4700. With analysts calling for 5,000, the relative strength index is overbought at 72, its highest reading in 3 months. RSI above 70 signals a pullback is likely, but in strong trends it can stay elevated for weeks. The MACD histogram is contracting, suggesting momentum is slowing, but hasn't turned bearish yet. Price is well above all key moving averages, but the stretched distance increases mean reversion probability. Volume has declined during holidays, making each move more volatile than normal trading conditions would allow. Professional traders are watching 44.13 to 44.50 as the make or break support zone going forward. The Federal Reserve delivered its 3rd rate cut in December to 3.6% annually. Chair Powell signaled only one more cut through 2026, but markets expect 2 or 3. Unemployment sits at 4% and has been rising, while core inflation remains at 2.8. Third quarter GDP came in strong at 4.3%, showing growth remains resilient despite headwinds. Geopolitical risks are multiplying, with US-Venezuela oil tensions and Middle East instability keeping safe haven demand high. The incoming administration has threatened tariffs that could reshape trade and accelerate central bank gold accumulation. China's slowdown is pushing their central bank towards stimulus, while Europe flirts with recession and more cuts. All these factors create sustained demand under gold that doesn't depend on any single catalyst or event. My forecast sees gold consolidating between 44.50 and 45.50 over the next 2 weeks. The probability of a breakout above 45.50 toward 4700 is roughly 20% for bulls. The risk of correction to 4300 is only 10% given the strong fundamental backdrop supporting prices. Key catalyst dates include January 28th for the Fed meeting and early January economic data releases ahead. Here are 3 actionable trades based on this technical and fundamental analysis. You can execute immediately. Trade 1. Hold existing longs but trail stops below 4400, taking profits at 45.50 and 4700. Trade 2. Wait for pullback to 44.20 to 44.50. Enter long with stops at 43.80. Target 4600 for a risk-reward exceeding 1 to 3, offering excellent capital preservation and upside. Trade 3. Enter on breakout above 45.30 with stops at 44.80, targeting 4700. This as 1 to 3 point for risk-reward, but requires tight execution and strong momentum confirmation. Never risk more than 1 to 2% per trade after a 70% rally. That's stretched all indicators. Use smaller positions and scale in rather than go in all in at current levels near record highs. If you found this valuable, hit that like button and comment whether you're bullish or bearish below. Subscribe and turn on notifications so you never miss my daily breakdowns and professional trade setups. Tomorrow, I'm covering silver's explosive move above $70 and whether it can hold those gains. Thanks for watching. Trade smart, manage your risk, and I'll see you in tomorrow's analysis.